Now the 1 hour time frame, we use this for time precision trading. Okay, more like framework for looking at the weekly range on the hourly chart. What you want to do is you want to delineate the beginning of Monday midnight New York time. Okay, so your wherever you are, your platform, or rather your time zone, should be converted and should be in sync with the New York time. Okay, and Friday's close. So now this is more like how am I going to put this? A point at anytime a significant move lower is expected, always anticipate some major stop hunt on buy stops or some short-term high be taken out. Then anytime a significant move higher is expected, always anticipate some major stop hunt on sell stops or some short-term low be taken out. Okay, so let us look at how we use the 1 hour time frame on our chart. How do we apply it on our chart? Okay, now we are currently on a weekend. Okay, and this is the weekly candlestick that just closed. This is the weekly candlestick that just closed. Okay, and so this is a delineation from on Monday to Friday. Okay, so this is the 1 hour time frame. As you can see here, this is the 1 hour time frame, and this is each horizontal line you are seeing here is delineating 12 o'clock New York midnight New York time. Okay, 12 o'clock New York time, 12 o'clock New York time, 12 o'clock New York time, 12 o'clock New York time. So this is Monday's opening and this is Friday's close. Okay, this is Monday's opening, Friday close. All right, so now this is for back testing, and not only for back testing. This is how we go into the marketplace on every week. This is how we go into the marketplace, and this is how we hunt or trade, rather, with time precision, with time-based precision trading. Okay, time-based precision trading. So this, because what we are trying to do right here is that ICT teaches it on his channel. Okay, the only two things that is very important in the marketplace is time and price. Okay, when you know how to combine, these two factors together, when you are able to combine these two factors together, you are going to experience dynamic change in your trading. Okay, so what we are going to learn right now is how to combine time precision and price. How we can combine time and price together. Okay, so now on your after we started from the weekly time frame, right, and we have worked it down to the 1 hour time frame, and I've showed also far how we are able to arrive here. Okay, so this is the past. Remember, we are on a weekend and we are expecting price. As you can see, price is bullish here. The price is bullish here. Okay, we are using high sides and here. So price is currently bullish, reaching for that weekly fair value gap. Okay, this is the weekly fair value gap. This is the opening and the end of that weekly fair value gap. Okay, and price, as you can see, is currently trading bullishly. So this is the present week that just closed, and we are anticipating a new week to likely trade up and fill in this fair value gap. Okay, and now this is how you want your chart to be. This is how you want your chart to be. You want to delineate the Monday's opening, okay, and Tuesday opening, Wednesday opening, Thursday opening, and Friday opening. Okay, now this is a 1 week range. This is a 1 week range. This is a weekly range. Okay, this is a weekly range on the 1 hour time frame. Okay, so now we are going to go into each and every day, like we will do on a live chart, on a live data. We are going to do kind of back testing right now, and I'm going to show us how we can apply um, time precision, time based trading, how we can apply it on our chart on a daily basis. Okay, so this is how you want to set your time. This is trading view. This chart is from trading view. Okay, so tradingview.com is free, and you want to set your time zone to New York time. Okay, your time zone should be set to New York time. So this is 12 o'clock a.m. New York time. All right, so let's go down to our next time frame. So the intraday charts, okay, or time frames. The intraday charts refers to the 15 minutes, 5 minutes, 3 minutes, 2 minutes, and 1 minute. Okay, so the 15-minute chart is used for intraday trading. Okay, so the 1 minute, 2 minute, 3 minute time frames tends to be the best for finding imbalances. Okay, if you are looking for high frequency setup intraday, the 1 minute, 2 minute, and 3 minute time frames offers really good clarity. This is because the high frequency trading algorithm are operating on nothing higher than 3 minutes. Majority of the time on seconds, 50 seconds, 30 seconds, 45 seconds, 60 seconds interval. And what they are looking for are the small imbalances. Okay, so if you have been following up ICT for a while now, you will know that price operates on algorithms. Okay, price is being delivered to the marketplace by algorithms. IPTA, known as IPTA, interbank price delivery algorithm. Okay, and this algorithm works on smaller time frames. Okay, so what this means, if you are looking for high frequencies setup intraday, you want to look at the 1 minute, 3 minutes, 5 minutes, 4 minutes. Okay, so because they offer really good clarity, and you can easily spot imbalances on this time frame. Okay, so we use our 15-minute chart as a higher time frame, and we will hunt for our entries on the 1 minute, 2 minute, 3 minutes, 4 minutes, 5 minutes time frame. Okay, so now important, look for imbalance after the market structures breaks. So these are like tips I added to the note. Okay, I will show us where these tips come in on the chart. So important time of day for forex market. So this time here, they are all New York time. Okay, so 2 a.m. to 5 a.m. New York time zone. This is the London trading session. You can start hunting for your money trades. Okay, 7 a.m. to 10 or 11 a.m. the New York time zone. Remember, New York time zone, this is your New York trading session where you can hunt for your money trades. Okay, then 12 p.m. to 1 o'clock New York time zone. This is the New York lunch hour. You might want to avoid trading on this particular time frame. Okay, on this time period, you might want to avoid trading for this 1 hour time frame. 1 hour time period, New York lunch hour, 12 to 1, you might want to avoid trading. Okay, so now for your afternoon trades, you might want to start from 1 or 1:30 in the afternoon to 5 in the evening, if I'm not mistaken. Not covers that with 24 hours time, but this is just the time period we are looking for to trade. Okay, so now we are going to learn how to apply time and price in the marketplace. Okay, so you might want to take note of these times, they are very important, and let us get straight to the business of the day. Okay, good. Now this is the present weekly present week that we are expecting a new week to form. So this is like back testing. Okay, to do before we get straight to before I drop us down to the intraday charts on the 15-minute time frame, I want us to take a look at something on the weekly time frame. Okay, now what I want us to do right now is to imagine that this candlestick has not appeared. Okay, this candlesticks has not appeared and we are currently here. Okay, and let's say we pull up our chart on the weekly time frame and we are currently here, and we are able to anticipate that price is likely reaching for this old high right here. Okay, this swing high right here. And okay, so that eventually has given us a bullish bias that we are going to be bullish from where we are right now, that we are hoping that price is going to trade up here and probably reach for this fair value gap. Okay, probably reach for the, okay, let's use this markup. Okay, let's say we are here on this week and this week has not come into play. Okay, this week has not come into play and we are able to anticipate that price is probably reaching for the liquidity, the buy side liquidity resting above this old high, this swing high, and it may likely reach up to this imbalance. Okay, so with that in mind, that alone has given us a directional bias that we should be expecting bullishness in the new week, which is this week, which is this weekly which is this week that we are currently. Okay, although it has closed, and although this weekly candle has closed, but we know that this week was bullish. Okay, we know that this week was bullish. Okay, so with that in mind, coming down to the 1 hour chart, this is that weekly candle. Okay, the weekly candle right there that has closed here. We know we are bullish. Okay, and we already have our bias that we are bullish. We are expecting higher prices. Let's say we're able to anticipate it from this previous week, that this new week that we are expecting price to trade higher. In other words, we are pretending that none of this has happened. Okay, using the high sign. Okay, but what we are going to do now is try to pretend that this has not happened. Okay, so now we are currently on the previous week, so and we are able to anticipate that price is probably reaching for this old high. Okay, liquidity resting above this old high and is going to reach for this weekly fair value gap. Okay, now let us go down to our 15-minute charts, our intraday charts, and see what we have right here. Okay, now this is the previous week that has closed, and we don't normally, and this is on Tuesday's opening. If you are a student of ICT, you know that we normally start our trading week from on Tuesday. Okay, so knowing that we are expecting bullishness in price, so we are going into the marketplace with just one mindset, and that is to buy. Okay, so we are looking for buying entries, we are looking for buying signals. Okay, so now this is a 24-hour window chart. Okay, like you can see here, this is 12 o'clock Tuesday opening and Wednesday's opening. Okay, this is a 24-hour price action. Okay, so we are looking for bullishness, we are looking for higher prices, so we are going into the market with just hope of looking for buy entry signals. Okay, so now before we dive deep into it, I want to explain a concept to us, the power of 3, ICT power of 3 for bullish days. Okay, so now if we know that we are expecting bullishness, which we already are, because we are expecting higher prices, and we want to apply the power of 3. How do we apply it to the chart? So the power of 3 is like, if we are expecting a bullish market or a bullish day, okay, so in other words, we are expecting the market to open, trade down first, trade up to form the high of the day, and close. So if we are hoping to buy in the market, in other words, if we are hoping to buy in the market, we are going to be hunting for our entries, our buy entries close, near or near, below rather, below or near the opening of that particular trading day. So what do I mean? If we are expecting bullishness, and which we already know, with benefit of hindsight, that we are bullish, this week is bullish, and on Tuesday is just opening. So what we are doing is that we are ignoring this whole price action data, that it has not come into play yet, and price just open right here. Okay, price just open, and we are just coming up 12 o'clock midnight. We'll pull up our chart 12 o'clock midnight, and we delineated it 12 o'clock midnight, and price has just opened on a Tuesday, and we are expecting bullishness. Okay, so what we want to do is that we are going to be buyers. We're going to be buyers for the day. So our bias is bullish, and we are looking for buy signals, for buy entries only. Okay, so now applying the power of 3 to it, we are only going to be hunting for our buy entries close to the opening candle of that day or below it. In other words, we are not hoping, we are not looking to buy above the opening of the candles of that trading day, that particular day. The candles that open up that day, we are not going to be looking for entries above it. For our money trades, between 2 o'clock to 5 o'clock, which is London session in New York time, we are not looking for entries above the opening candle, the candle that opened that particular day, the candle that opened at exact 12 o'clock a.m. on that trading day, which we can see here. This is the candle that opened up this day, this Tuesday. This is the Tuesday opening candle. You can see I draw it out in time. So what you want to do after delineating the new trading day, which is on Tuesday, with a horizontal line, what you want to do on the 1 hour time frame, the candle that opened up the 12 o'clock a.m. midnight, take a trend line and draw it out in time. You want to draw it out in time. So in other words, if we are looking for a buy entry, we are going to be buying below the low of this candle. Below the low of this candle, we are looking for our entry below the low of the candle or close to the opening. Okay, we are looking for the low. We are looking for our entry at the opening candle or below it. In other words, if we are anticipating a bullish day, the movement of the day should be open, low, high, and close. So in other words, if we are trying to capture the daily range, we are going to look for high probability entry. Our high probability entry is going to be under the low of the candle that opened up that particular trading day. Okay, so if we are looking for our entry, we are going to be hunting for our entry once price trades close to the opening candle or below it. That is where we start looking for our entry. Okay, so if we are bullish for bearish day, we are going to be looking for our entry, because if price were to be bearish, the opening will be above and our close will be below. It will be vice versa. Okay, so if we were to be bearish, we're going to look for our entries above the opening candle of that day or close to it for our sell entry, and close to it for our entry. Okay, so now that is how we apply the power of 3. So now our directional bias is prime is bullish. So where are we hoping to get our entry from? At the opening candle or below it. That is where we are hunting for our entry. So until price trades for our money trade, please take note, this is for our money trade, okay? Because once we get to the afternoon trade, price would have traded away from the opening of the day, okay? So if you are hunting for your morning trade, which is between 2 o'clock a.m. to 5 o'clock a.m. New York time, you should be hunting the high probability trade setups are formed around the opening candle or below it, okay? So that is how you cash the daily range. That is how you cash the daily range, okay? So now let's break this down further. So if you are having difficulty understanding the concept of power of 3, you can also leave a comment and I will make a separate video on it, okay? I'll make a separate video on it explaining it thoroughly, but I hope I've been able to drive enough points. And always remember, whatever I teach here is also available on ICT channel, okay? You can also check it up and learn it from him. I myself am a student of ICT and I'm still learning from him, and I'm just hoping to share with us the few things that I've learned so far from him, okay? So now let's get to the next slide. Now this we are now going to apply, this is how your chart is going to look like, okay? Applying the time of the day. So now this tick, is it purple or blue? This tick line here, this is 12 o'clock a.m. New York time, and this is 2 o'clock a.m. New York time, okay? This is where we start hunting for our money trade. This is 2 o'clock to 5 o'clock a.m. New York time, and this is 7 o'clock to 12 o'clock a.m. New York time. So this time period is where we hunt our money trade, okay? This is where we hunt for our money trade, okay? And this is 12 to 1 p.m. 12 o'clock p.m. to 1 o'clock p.m. is the New York lunch hour. Remember, whatever time I'm using here is in sync with the New York time. It's in the New York time zone, okay? So 12 o'clock, between 12 to 1 o'clock p.m. is the New York lunch hour. So we want to avoid trading on this time period, on this time window, okay? We don't trade, we don't do anything, okay? Then from 1 to probably 4 or 5 p.m. in the evening, this is where we hunt for our evening trades, okay? Probably you can hunt for your afternoon and hold it to the close of the day. Depends on you, okay? Depends on you and depends on the trading environment, on how the markets offer price on that particular day, okay? So you see that the move on this Tuesday happened very late. It was between 1 o'clock to you can just see the time period here, okay? Most of the move happened late in the evening, okay? So now this is how you want to delineate the time. You want to delineate the time windows on your chart, okay? This is just how you should delineate the time. 2 o'clock to 5 o'clock London session, New York time, okay? 7 to 12, this is when the New York and the London session overlaps each other, okay? And 12 to 1, you want to avoid trading because that's the New York lunch hour. Then from 1 to 5 in the evening, 6, depends on you, okay? So probably what you want to avoid is that if you can get an entry and a good setup in the money trade, I don't think there's any need trading the afternoon trade again. Okay, or you can do that, but you can also look for setups for your afternoon trades on a demo account, but it all depends on you. Okay, so if you can get an entry on, on the morning trade, and you get a good entry and you get some profit, you can just leave the rest of the day. You can just take the day off from trading. Okay, you don't want to over trade, you don't want to give back to the market what you have already taken from it. Okay, so now this is how you want to delineate the time window and on your chart. Okay, this is how you delineate the time windows on your chart. So this is that opening candle from the 1 hour translated to 15 minutes. Okay, remember I said applying the power of 3, we are bullish, our bias is bullish, and we want to look for our entry, our bullish entry at the close, at the opening candle of the day. Okay, the candle that opens up the trading day, we want to look for our entry, our bullish entry, our buy signals at the opening or below it. Okay, at the opening or below it. All right, so now let's drop down into more details. Okay, now take a look at this price action right here. Take a look at this price action. So now when price opened 12 o'clock midnight, it traded upwards nicely. Then price started you know dropping, it started dropping, and it created nice equal lows here, created a nice double bottom, and probably some people are going to be buying this as a double bottom. So I'm going to be selling the tops. Okay, so price consolidated here a little, and you can see that between this 2 o'clock to uh to 1 o'clock in the to 12 o'clock rather in the afternoon, for our money trades there was no entry. Remember I told you, if we are looking for our entry on bullish days, we are going to be looking for our entry at the opening, or more higher probability of a trade setup should be below the opening candle of that trading day. Okay, so now price didn't trade below the opening candle until around 12, and the time factor is not really showing here, but it should be around 12 in the afternoon. And 12 to 1 is New York launch hour, so we don't trade on this time window. Okay, so price, we don't trade on this time window between 12 to 1. We are not trading, we are not looking for any setup. Then immediately after 1 o'clock in the afternoon, look at what happened. Price created a support level here, created another one. This is a swing low. Okay, and this is another swing low, and price dropped down aggressively. Remember, one of the tips I added on my note was that if we are expecting bullish, if we are expecting price to expand higher, we should anticipate some level of stop run on sell stop or sell side liquidity. Okay, so which is what just happened here. Price dropped down below this support level here, taking out the sell stop, resting below here, and where are we? And we are below the opening of the candle. Price goes below and hold low to grab liquidity after the New York launch hour. Okay, this is what we see here. And where are we right now? We are below the opening candle of the day. So this is a high probability entry for our buy setup. Okay, so let us drop down and see what we have. Yeah,